Lim Say, boy, difficult times on the markets, isn't it? It seems like all good and optimistic economic news thrown out the window, and it just is indiscriminate selling.
Well, that became clear to us some 2 months ago when we cut our weighting in equities to underweight in our tactical asset allocation. We went seriously underweight stocks in our tactical plays, and we went overweight on bonds, and we raised cash because essentially what we saw coming was, never mind the economic numbers. The economic numbers will show you broad weakening in global data from the U.S. to the euro area to China. I think risks of a recession in the U.S. have risen significantly, but never mind the economic data. I think what is more serious now is that the markets are challenging the limits of government intervention, the limits of government intervention in the U.S., particularly in the euro area, where they don't seem to be able to contain the broadening of the sovereign debt crisis spreading from Greece.
Yeah, okay, so where is bottom then? Can we see more downside?
Look, what we saw 2 months ago was a painful process of liquidation, and that process of liquidation is looking fairly well advanced now. But I've yet to see capitulation, but maybe capitulation may not be all that far away. If you look at some of the indicators, the American Association of Individual Investors bull-to-bear ratios, that's starting to show you some extremes in pessimism. If you look at the currency trades, the 25 delta risk reversals, they're also telling you that the growth currencies, the Asia ex-Japan currencies, the Aussie, they're all coming under a fair amount of stress now. So we're still in liquidation mode, but the capitulation may not be all that far away.
All right. When do you think we might see capitulation then? What's going to precipitate that?
Probably a default by Greece. I think the Europeans have to get their act together really quickly, and I don't think there's a lot of time left. They've been dragging their feet on this for way too long. They need to do two things really urgently. The first, which is obvious, which is to leverage the European Financial Stability Facility, to leverage that up from 440 billion euros to something over 2 trillion euros, which will be more sizable to deal with the sort of problems that they have on hand, which is sovereign debts of over 3 trillion US dollars. So that'll be sizable. The next thing they have to do urgently is to recapitalize those banks which came in marginally, which marginally passed the stress test of not so long ago. They really have to recapitalize banks pretty urgently as well, because Greece is going to default.
Okay, well, does it matter if it's disorderly or an orderly default for you in Greece?
It matters a great deal. If they organize themselves properly, that is, they get recapitalization in place, if they organize themselves properly and they get the European Financial Stability Facility properly funded from 440 billion euros leverage up to something like 2 trillion euros, then you have a half-decent chance of surviving the fallout from Greece. It has to be controlled. If it was controlled, that would be capitulation. There would be a chance for people to start buying. But if it's uncontrolled, right, you wouldn't want to be buying either.
And you're saying there will be more pain and losses to come, but we should remind our viewers and those on the markets this is not the end of the world. So what do you do in the meantime? You hold cash? You're getting into bonds?
Well, we've raised bonds 2 months ago, but even bonds, especially bonds in Asia ex-Japan, have also been hurt by the risk aversion that's going on. Really, right now, there are only two things that work: cash and buying into volatility, buying into equities vols. These are the only two things that work. Even gold hasn't worked all that well over the last few weeks.